I'm Priscilla Barrera with the Investing News Network, and here with me today is Daniel Jimenez of iLi Markets. Daniel, thank you so much for joining us today.
Thank you, Priscilla. Nice to see you again, and thank you for inviting me.
For sure. So today we're going to be talking about the lithium market. And my first question for you is, did the market perform as you expected at the end of last year? Any surprises in the lithium space in this first quarter?
Yeah, it would be not true if I tell you the market developed as I was expecting, at least starting what happened in December. The truth is we were coming from a very depressed market, and there was a sensation of overproduction and a lot of idle capacity. But this sudden turnaround, which one was expecting at one point in time and fairly soon, actually was a lot quicker than at least that I was expecting. And there are several factors which played into this. And I would say they all pointed in the same direction. From a demand point of view, we saw EV sales gaining a tremendous speed already in September. And then all of Q4 was a very, very strong quarter for EV sales. So that already generated a lot of demand for lithium. On the other hand, there was this Altura going bankrupt. And suddenly this flow of raw material, of feedstock, stopping to come into the market created immediately a sensation of, oof, now we have less feedstock available. And then the third element, I think, which also played in there was the surge of the demand for LFP, and that in an industry where everybody was geared towards producing more lithium hydroxide, suddenly lithium carbonate was the product needed. And nobody was really prepared for it. There was very little inventory. And then this demand for carbonate comes. It pushes up immediately prices up of lithium carbonate. That in turn also generates a need of people who were with zero inventories to start buying and immediately and building up their inventories, because people are already seeing that prices were going up, and then it was of course better to increase inventory levels, and that of course has like a double effect. The apparent demand is higher than the demand, at least for that period of time when inventories are being replenished. So I think there were a lot of factors which played all in the same direction, which led to this sudden surge of lithium carbonate prices then, and then followed by all the other lithium hydroxide in particular. Now, during this quarter has basically continued that trend, and I think we are in a situation in which we will very likely see prices remaining at these levels or from this levels or higher. It is very unlikely that prices will go below the levels we're seeing today. There might be some small downturns as idle capacity, which is today in the industry, is being brought up to operate again. But I think though the owners of that idle capacity, they're being very cautious in how they release that expanded production in order to try to maintain prices also at these levels, which are already very attractive levels for all the players in the industry.
Right. So speaking about prices, will we see those prices go up in Q2? Do you have a specific forecast? And then we're going to see this sustained level throughout 2020?
I think in general terms, we have entered a phase, a cycle in the lithium where demand growth is being so strong that it will be difficult all the way through for supply to maintain that growth rate. Yeah? And for that reason, I believe that it is very unlikely that prices will eventually go down again, at least in a near horizon of the next 3 to 5 years. Having said that, today we have a lot of idle capacity still. This is in the hands of Talison. It's in the hands of Albemarle through Jimenez. It's in the hands of Pilbara with Altura. This is all idle capacity, which, depending on the speed at which it comes on stream, it could or could not create a price downward price pressure. But I think that is very unlikely. So really, I would dare to say that prices will, starting from the levels they are today, they'll probably continue at these levels or adjusting upwards over time. Yeah.
So I just wanted to circle back on something you mentioned before, which is this discussion about LFP cathodes and the surge we've seen for demand in China. And we might have a lot of people that are watching that maybe come from other markets. They're looking at the lithium opportunity. What should new investors keep in mind when looking at this or listening to this discussion of lithium hydroxide versus lithium carbonate, and what could, how that could look in the future?
Yeah, that's an unfair question because the answer is not very clear. And when we go 1 year back, everybody was talking that this was going to be a high nickel lithium hydroxide world. Still, things started to change when BYD and CATL started to talk and increase the energy density of LFP. Then came Tesla, then came Volkswagen, and suddenly we have mainstream players also talking about LFP batteries, so lithium carbonate demand for that. So, and how this is going to evolve over time, I think it's still an open question. It's probably not going to be one or the other, it's going to be both. But I would dare to say that compared with what we were thinking 1 year ago, it's going to be a bigger share of lithium carbonate. Probably the mass production of electric vehicles will be based on lithium carbonate, also on LFP batteries or LMO batteries, which have a lower cost. And probably the high-end vehicles, they will use high nickel batteries. But so I think there will be room for both, and it will most likely, though, be a bigger carbonate market than what we were thinking it was going to be 1 year ago. Yeah.
Right. And a big news last week was the announcement of the proposed merger between Orocobre and Galaxy Resources. I wanted to ask you your comments on this deal and what challenges maybe this merged company could face going forward.
Yeah, I think the move is a move which acknowledges one thing, and that is that in future the lithium feedstock will be the bottleneck in the production of lithium chemicals. It will not be the refining, most likely it will be the feedstock. And by merging these companies, they're putting together a couple of resources, which in the aggregate amount to a big resources, a big amount of resources of lithium. So in that respect, it makes it a very big company with different type of resources, different geographies, and that of course is interesting. I would think from a challenge for these companies, there's a clear synergy. Both of them, well, Orocobre has an operation in Argentina. Galaxy is going to start up an operation in Argentina, both based on brine. So that is certainly know-how, experience, which can be shared and it will be beneficial. But then you have the development, the projects in Canada, in Australia, which at the end, I would say the biggest challenge is to manage 4 operations or 4 projects, if you want, simultaneously. And to that, you need to add the refining, which Orocobre is doing for the production of lithium hydroxide in Japan. So it is spread of worries, of concern is not small, and that I would say is the biggest challenge. But all in all, I think it's putting together quite a few assets and resources which will be very important over the coming years. The world will need of these resources. And asking a little bit to your earlier question about what investors should be looking at when, whether carbonate, whether hydroxide. Yes, both things are important. I mean, it's important to have a view on that, but I think more important than that is to have a view of the lithium feedstock for that production. That is what is going to be needed to produce carbonate or hydroxide, whatever you want. You will need a lithium feedstock, and that I think will be the bottleneck in this development.
All right. And do you think we will see more mergers in the lithium space of this type?
I would think, well, there are not too many to merge anymore. Huh? First of all, the industry is consolidating quite a bit. But I would think that we will see more than mergers. I would think there will be an upstream integration because of the same what I told you earlier. If we're seeing that lithium feedstock is the bottleneck in growth, well, if you're a big consumer of lithium units, you better make sure you have a secure supply. And one way of doing this is to have equity positions in feedstock producers, and which is something which we have seen Chinese companies doing quite actively in Australia, in Argentina, or Toyota doing the same in Argentina. So I would expect that we will see more and more of this upstream integration by OEMs. And if it's not OEMs, it will certainly be, there will be a lot of activity on the cell manufacturers in trying to secure the lithium feedstock. At the end of the day, that will be the key competitive advantage, in my opinion. But that guy who has the lithium feedstock, he will be able to participate in the supply chain.
All right. My last question for you today is, again, for those investors that are now looking at this lithium opportunity, what would be your best piece of advice, considering that we've seen lithium price volatility, we're seeing all this activity in the space? What would be your best suggestion for someone new to the sector?
Yeah, I mean, there are a lot of possibilities to invest in lithium in existing companies, in new developments, in new technologies. I would say, as a general theme, lithium will be going up. It will be a growing market. I think also in terms of profitability, it will improve over the coming years. We could very well see high price cycles again, or peaks, and during periods of time of this strong growth of demand that simply a supply cannot catch up. So to participate as an investor in the lithium space, I think is a very safe bet. Now, with whom in particular, and with whom could you get higher returns? Well, I think the expansion, the capacity to expand will be key to create value. And in that respect, experience, so companies which have experience doing that, I think they are a safer bet. And then on the other hand, when I look at new players, I personally, this is my personal opinion, I like more resources where a more conventional technology is being used, because unconventional technologies, which there are many out there, and one of them will eventually be the big success. Who knows what that one is going to be? But I think if I would spread the risk, I would rather spread it in conventional technologies, or concentrate more on conventional technologies than in these new technologies. And again, some of those technologies will probably be very successful in the future, but which of them, that is difficult to say today.
All right, Daniel, thank you so much for joining us today.
Thank you very much, Priscilla. Thank you for having us here.